to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at Exchange, an ETF experience where we are meeting with the top thought leaders and innovators in the ETF space. Joining me for this segment, we have Brie Williams, Head of Practice Management over at State Street Global Advisors. We're going to learn how advisors are honing in on their ESG strategy. Brie, it's great to see you in Miami. Welcome to Trade Talks.
Thanks for having me.
And there's been a lot of focus on the increased adoption strategies with ESG. Can you explain where we are right now with things?
Sure, I think it's a really interesting time in the markets with ESG investing because after years of building foundational efforts, we're finally looking at ESG becoming more mainstream and a key component to portfolio development. So you have obviously the fiduciary duty, that's a key catalyst for growth, but it's also now about investors really recognizing and considering that there's some risks that they can mitigate by looking to ESG factors. I think also when you look at the standards of practice and the change that's in this space, it's pushing our industry to raise the bar. Can we be more consistent in areas of data frameworks? Can we also look to regulation to help us apply some standards of practice to move us in the right direction and move away from things like greenwashing or brownwashing? All relevant.
Yep, and perfect segue to my next question.
Sure.
What barriers still exist?
Well, definitely data continues to be a barrier. Progress is being made, but that consistent framework will help index providers and asset managers really center on how they report information and what factors are available for them to look at. We also have the regulatory market that's under an evolution, and that is going to take some time, but if you look to across the pond, with SFDR, we see some great traction there, and the whole global markets are looking towards what's happening in the European Union and the steps that they're taking. We have a bullish administration on ESG now, and you've already seen some moves coming from the SEC. So with the data and the regulatory market, that then leaves product choice, which continues to be prolific and more diverse. And the choice allows for a wider range of asset class application of ESG considerations in one's portfolio.
And as individual investor demand grows, of course advisors are going to have to step up their game when it comes to ESG management. What are advisors doing to hone in on their ESG strategies?
So happily, advisors have moved past looking at ESG as a niche strategy. This is something that they're taking the time to do deeper discovery, and conversations with clients are becoming more regular. It is a standard part of the financial planning process if ESG is a factor of importance for one's investment outcomes. So taking the time to understand motivations and what the goals are by incorporating ESG factors into the investment management plan, those conversations are becoming richer. Also, what we're seeing with advisors is they're not taking the ESG label at face value. They're really taking a look at what's under the hood, what are we bringing into the portfolio, the role that it has to play, and they want the evidence. They need that transparency and consistency in how ESG will perform within the portfolio.
That's encouraging to hear that advisors really want to take a look under the hood. So tell us about the Spyders ETF strategy, the ESG ETF strategy.
Sure, absolutely. So we have an open architecture approach, and we really are designed to have products that are fit for purpose, that reflect what investors' objectives are today. And we want to be helping them pursue the desired investment outcomes that they have. When I think about our lineup, we really put that into two categories. We have broad ESG, so strategies that are focused on all ESG factors, and then you have thematic ESG, strategies that are focused on the E, S, and or G considerations. So we want to make sure that whatever their investment outcomes are, we can start with the discovery component and work our way down to an appropriate investment solution. So expanding our lineup to include more choices across investment classes, expansion in fixed income as an example, making sure we have active ESG, not just broad equity-based and or thematic solutions is critical.
So Brie, when you look forward into the future, what are your expectations around ESG and what it might look like in the next few years?
We expect ESG to continue to grow. The trajectory has been dynamic. Just look at Morningstar's data and you saw a 12% quarter-over-quarter growth inflows into ESG products. So with the continued improvement in regulation, with better data frameworks coming on board, and with the wide variety of choice, you have more application options. Education, though, is going to be critical, both for investment professionals, but also the end client, so they understand what the role of ESG is within their portfolio and that they're going to stick with it for the long term. So if it's about risk mitigation, how is ESG helping you do that? So the education will be a key to our success in terms of how we continue to grow on this trajectory.
All right, Brie, we appreciate the insight. Thanks
My
for joining
pleasure.
us on Trade
Thanks for
Talks.
having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.